In this video, I will discuss the Q4 FY25 result and Concall of SBFC Finance. So at first, I will talk about the company overview, and then I will move on to the result and Concall, and then I will talk about little bit about the opportunity in SBFC Finance for investing. So at first, it is a NBFC which is working on the MSME lending space. So for SBFC, 83% of AUM comes from the secured MSME. Their whole book is 100% secured, and they have a little bit of business. Their little bit of business comes from the gold loan also. So that is the AUM part. If we talk about the geography, it work or present in 37% comes from south and 34% comes from the north. That is the majority part, and they are also present in west and in east, little bit of that. So if I talk about the branch by state, it is UP has the most amount of branches, and then Karnataka, then Maharashtra. That is the geographical presence. And if we talk about the customer segment, mostly the customers are from self-employed. 93% of customers are self-employed, and 85% of customer have a civil score of greater than 700. So that is the customer category. So mostly self-employed. Obviously, it is a MSME business, so all of those will be self-employed, mainly all of those. And if we talk about the LTV of the portfolio is 42.6%. And as I said that its whole book is secured. So it is a secured MSME backed by any collateral like property or machinery and something. And another part of 17% of AUM comes from the gold loan. So that is the point of company overview. So I move on to the result and Concall. So at first, if I talk about the AUM, they have a AUM of 8700 crore, which grown by 28% year on year. So if I talk about the AUM, it has slowed down. The AUM was growing around 40% few quarters back, and now it is at 28%. So if we see the whole MSME, whole MFI, all of those lenders have slowed down the AUM growth rate. So it is also for SBFC that it slowed down from 40 to 28% in this quarter. Few quarters back, I think it is not very long, I think 3 or 4 quarters, it was growing by 40% consistently, and now it is 28% of engine. And the guidance for the company is 5 to 7% quarter on quarter growth and 20% year on year growth for near term, I think. And if we talk about, they will cross 10,000 crore by FY26. That is obvious part. If they grow their AUM by 25%, they will end up doing much better than that. I think 10,500 crore something. So that is the AUM part. And if we talk about the disbursement, also there is a slowdown, not with the SBFC only, but through the sector there is a disbursement slowdown. But yeah, if we see the disbursement year on year grown by 5.8% and quarter on quarter 9.6%. So quarter on quarter there is some ramp up in disbursement, but it is not much because the year on year also this is low for a company like SBFC. I think they were growing disbursement around, if I am not wrong, 20%, um, around 20% maybe. So it is not good for the whole industry and also for SBFC. And then if I talk about the GNPA number is consistently moving upward quarter on quarter, so that is also a bad thing for a lender. Now it is at 2.74%, if I am not wrong, what my mind tells me. It was less than 2.5%, and it is now 2.74%, a increase of 31 bps year on year, 4 bps quarter on quarter. So again, the asset quality is not getting better or not getting stabilized. That is the main thing. If the lending space get a good traction, then it should get stabilized first. That is the main thing. But if we see GNPA number is consistently going up, that is a worry kind of situation, that where the GNPA number gets stabilized. And if we talk about credit cost also, that is range bound, but the guidance, they were guiding us around 80 to 100 bps of credit cost, but they are now guiding us for 90 to 110 bps credit cost. So they have shifted 10 basis point of guidance upward for credit cost also. So that is not also, if we all know that credit cost, if the guidance is going up, that is not good. And see, for SBFC, the guidance will not be around, to the sky high, because it is a secured portfolio. But for secured portfolio, it will, if there is some problem, it will go up slowly. So that is the point. For secured, see, if I am a borrower of MSME loan, so I will try my best to pay it, because I have kept my house or my any property, my business on the line. So for a secured business, for a secured portfolio, the GNPA number, the credit cost number will always go slowly upward. If there is problem, if there is no problem, that is all okay. And if there is problem, always that happens, and that is also happening with SBFC also. So that is the credit cost part. And if I could talk about the revenue, again slow down in the revenue part also. If we look back 1 year ago, it was growing about 45% year on year. Now it is around 30%. So in revenue part, and again a disappointment, and do not know when this will get over. It is, I again say, it is not with SBFC only, but with the whole industry is going through this. So we have to track the industry, that when the management is getting positive, there may be some good signs in MFI and other sections also, but we have to track it closely. And if we talk about the PAT, that have also slowed down. Obviously, if the revenue, if the AVM disbursement all are slowing down, the GNPA credit cost number is going up, PAT absolutely will slow down. Then if we talk about the PAT, if we go 2 quarters back, it was growing by over 60%. Okay, now the PAT growth is at less than 30%, and the operating leverage SBFC was getting till the last quarter. Now it is vanished, and so that is the point, disappointing point for the company. Because if we look back, maybe 2-3 quarters ago, the revenue was growing by 40%, and the PAT was growing by 60%. So there is a 20% of gap between PAT and revenue. So there was huge operating leverage in this business, and now it is completely vanished. So that is another point. If we talk about ROA now is at 4.5%, and the guidance also for 4 to 4.5% for near term for FY26. So ROA guidance is all good. If I talk about the ROE, then it is consistently moving up. It is a good point for the company, for the business, that the ROE is consistently moving up. If I go back to previous quarter, they have a guidance of 15% for FY26, 15% ROE for ROE by FY26. That is the point, 15% ROE by FY26, and now it is around 13%, up by 124 BPS year on year. So good move in the ROE. So we have to track that if they can achieve their guidance. So if I talk about the OPEX per EVM, they have achieved the guidance of 50 basis point reduction for a year, and for FY25 they had reduced more than 50 basis point, if I am not wrong, and they have also guided us for 50 basis point reduction for FY26 also. And the branch expansion, if I say, in FY25 they opened 22 new branches, and for FY26 they also guided us for 20 to 25 new branches. So branch expansion is also they hold their guidance. This for branch expansion. So, and the company management have said something for the market condition or the consumer sentiment, and they have said that if we go to the consumer staple types of company, I mean the HUL, the Hindustan Unilever, Nestle kind of company, they are not showing any growth. But if we go to the hospitality sector, again the discretionary types of company like hospitality, travel, and I mean anything you do not buy when you do not have money. Okay, like you have to eat rice, you have to use shampoo or soap, anything that comes to the part of consumer staple, okay, which you have to use in your everyday life. Those companies are not showing growth, but the consumer spending is on the airline industry, on the hotels, travels, and those are the sectors we have to look at. So that is their point of view. So that is the market condition or the customers sentiment. And if we talk about the opportunity in SBFC for investing, see the AUM, if we see the AUM growth that is coming down, disbursement growth coming down, PAT growth coming down, so everything is on the negative side. Only one positive is ROE, that is going up. So I do not think for now, for this quarter, SBFC is not a good option to invest, because market always rewards whose growth rate is intact or getting better. I mean, if SBFC doing a growth of 30%, and next quarter they are showing a growth of 35%, then 40%, or they are holding their growth like 30 30 30 30, like Home First, like India Shelter, those type of companies, market always reward those types of companies, and market do not like those companies whose growth rate is coming down. So that is the point with SBFC. It is my point of view. We have to track the company, we have to track the sector, where the sector is going, when the traction again will come back. Yeah, I think if you ask me, that the disbursement have picked up quarter on quarter, so maybe the peak is, the worst is behind. I have to track the companies again in the next quarter, then I have to then I can again know what should be done with these types of companies. So if we see in the Concall also, the management is not expecting huge amount of growth, because if we say about AUM growth, that is 25% of growth the management is talking about. I am not sure that if they are conservative, if they are giving a conservative number, or they are really expecting to growth to slow down, because they were growing about 40% few quarters back, and now they are saying about 25% year on year, and quarter on quarter 5 to 7%. So that is comes out to be around 20 to 28%, around we can say 25% of growth. So that is the point we have to see in the next quarter, that where the growth rate goes and all. So that's it for the video.